Okay, please note that we are now starting with our class. So we've got the following information, which is provided as part of activity 10 on your workbook. So question number one, um, it says Lucy Lauren practice under the name of Lauren Atonis. Lauren Atonis is a registered VAT vendor and all amounts include VAT of 15% where applicable unless otherwise indicated. Meaning that each and every amount that we're going to look at in terms of all the transactions, they are going to be including what? VAT. Only where VAT is applicable. So meaning that if you look at the transaction and whatever that we actually buy, it's an exempt item. It means that that particular transaction is what? Not including VAT. Only for items that are standard rated, then all those amounts that are provided will be including VAT. Unless otherwise stated that this is excluding VAT, then you need to identify whether this transaction is falling within standard rated supply or taxable supplies, so that you know that you need to calculate what? VAT. If not, then you do not calculate VAT. So over here it says that we've got balances on the 1st of June 2025 in the business general ledger. So this means that in the previous month of May, the company have been trading. And after it have traded throughout, then it closed with the following balance, which are also opening balance for the current month. Your capital account had a opening balance, closing balance of 315 May, which is the opening in the current month. Business bank, you started with 143,000 this month, which is favorable, meaning that this is a debit balance. And then you have got your equipment, law library, and then you have got fees, which is 845,000. And then you have got business client, Sally Snow, who currently owes the business 45,000, Julie Job, who owes the business 38,000. And then ABC Stationer, we owe them 25,000. VAT input that we currently have been charged 35,000. VAT output that we have currently charged our customers, it's 92,000. Salaries and wages, 398,000 have been paid out so far throughout the year. And this is the current that we've currently paid out. Rent expenses, this is how much we've paid rent throughout the year. So this is the current balance that we have spent it on. So this is the balance that we have spent it on this rent expense. And then it says that the balance on the 1st of June 2025 in the trust ledger is 83,000. So we have 83,000 sitting in our trust what? Bank account. But this 83,000, 55,000 belongs to who? Salis No, 28,000 belongs to Toby Tyler. So these are our two trust clients accounts. Then you have got the transaction for June 2025, which are provided, and then you are required to record all of these transactions in the accounting equation, which is what we're going to do first. And then after that, we'll then record all of this transaction in these other journals. From the journals, we'll use the same transaction or journals to post to the ledgers. From ledger, we'll then create what we call a trial balance. I will explain what a trial balance is used for at a later stage, as well as how to prepare the income statement and the statement of financial position. But the statement of financial position is much easier once you understand the accounting equation, because everything that you recorded in your accounting equation is going to be summarized through the statement of financial position. You're just going to show all the assets account, all the equity account, and all the liabilities account. You're going to show the total assets, you're going to show the total equity, you're going to show the total liabilities. But when you add the total liabilities and equity, they're supposed to be equal to your assets. So that's what we'll be covering at a later stage. So let's go and look at recording this transaction first in the accounting equation. So to save us time, I already recorded the two accounts affected, which are the main accounts, which I believe at this stage you already know how to record that. So the first transaction, it says that Lucy Lauren withdrew 20,000 from a capital contribution via EFT. So to record this transaction, I'm just gonna quickly look for my workbook solution. Okay, here it is. So this is a business transaction. The accounts affected is your drawings and business bank. Your drawings is going to be debited to indicate that the owner is withdrawing money from his what? Capital contribution. In your memorandum, it showed capital account. According to accounting principle, that is still correct. But we said that we're going to use what? Drawings to totally indicate the total money that the owner withdraw, including the assets that the owner have taken out of the business, so that we have records of the total what? Amount taken by the owner of the business. So we're going to debit drawings, credit bank, business bank to indicate the money that was taken out from the business bank account, which is then going to have an effect on the assets being minus 20,000, effects on owner's equity minus 20,000. So every time the owner takes something from the business, it reduces his equity in the business, which is his claim in the business, and therefore zero liabilities. Transaction number 4, it says that paid 14,000 via EFT as rent for office. So we are paying for rent, which is what? Business rent. So this is a what? Commercial property rent. So it will be including what? VAT. So this means that the accounts affected, which are the first two main accounts, is your rent expense and business bank. And therefore, the third account that is going to be affected is going to be the VAT input, because you are paying for rent. So you are being charged the VAT. So when you get to be charged VAT, the VAT becomes what? VAT input. So it's the VAT that we can be able to claim back from SARS. So this means that here we're then also going to indicate that we have got what? VAT input. So you are not allowed to record all of this in one row. The first row, you record the main accounts affected. The second row, you record the VAT effects. So most of you recorded everything combined in one column, which was incorrect. So when you record this, this is how you record. You start with the two main accounts affected. Then the second row, you show the VAT effects, whether the VAT that you are talking about is VAT input or VAT output. If you are paying for something or buying for something, you are charged VAT input. When we are charging our clients, it's going to be VAT output. VAT input, it's always debited. VAT output, it's always credited. And they will always have positive effects on the accounting equation. None will be negative, but all positive. So in this case, the total amount that we paid will be recorded under what? Business bank account, which is the VAT inclusive amount. So which means on our business bank account, which is an assets, we are paying how much? 14,000. And then we can then now calculate how much is actually our rent amount, the cost that we're incurring for our rent. So this means that we're gonna come and say 14,000 multiplied, 14,000, multiply this by 15 over 115. This means that we are paying a rent of how much? 1,000, the VAT of 1,826. So this is the VAT included in the amount. Then for the rent amount, you will say 14,000 is the total amount we paid including VAT. Divide this amount by 1.15. This will then give you the VAT to be how much? 12,000, the rent amount to be 12,174 if we're rounding it off. So we're going to be rounding all of the amount off. So this is your actual cost for the rent. Then you add the VAT. Then that's the amount that we paid to the building owner for renting out the space. So over here, Under your rent, you'll then have a minus. You'll then have a minus 12,734. Then under your VAT account, which is an asset, you're gonna say plus and then record the VAT amount, which we say it's 1,826, right? So that will be your VAT amount. So this means that on your liability, there is no records. Any questions? No questions? Okay, moving forward. The transaction on the 5th, most of you recorded this transaction as a trust transaction instead of a business transaction. So it says here, completed divorce proceeding for Toby Tyler and accounted to him 32,890. I mentioned that every time you come across the word accounted to, it means that we are sending an invoice to the customer for the work that we have done. So you are billing the customer. So as you are billing the customer, it means that you are going to then create or record this transaction in your what? Fees journal. But since now we're preparing the double entry system, you are going to identify the accounts affected and record on the accounts affected. The account affected is your business client. When you receive money from the client, the money goes to your trust account. The customer becomes a what? Trust client, which is your trust credit. But when you render a service, you are rendering it for the what? For the business. So this means that now the transaction become a what? Business transaction. So that customer that you are rendering service to becomes a what? Business client or business debtor. So this means that here for this transaction, the account affected is going to be business debtor of Toby Taylor, and then another account affected fees, which is the money that we charge the client. Then we do not just only charge the client fees, we also charge him fees plus what? Plus VAT. So this means that there will also be VAT included in this amount. So this means that the three account becomes your business debtor for Toby Taylor, your fees account, and VAT output. VAT output will owe it to SARS. So this means that in terms of account debited and credited, you are going to have business debtor being debited to indicate the amount receivable. And then you're going to have fees being credited to indicate the income the business made. And then you're also going to have VAT output being credited to indicate the total amount you owe SARS that you have charged your customer. So this means that this side, you have got business debtor, and then you have got fees. Then we say that the third account will be credited, will be your VAT output. How much did you charge the client? 32,890. So this is the total amount that your client owes you, that you have billed the client. So I'm going to say this even though I've already said it in the recordings, all the two recordings that are already uploaded before. When you record on the customer's account, the amount have to be VAT inclusive. When you record on your business bank, the amount have to be VAT inclusive. When you record on your business creditor account, the amount have to be VAT inclusive. The item that you're buying, paying for, it's recorded at a VAT exclusive amount. The income that the business made, which is fees, has to be recorded at a VAT exclusive amount. Then you show the VAT separate. I'll repeat this for the last time. Your business bank should be recorded at a VAT inclusive amount. Your business debtor should be recorded at a VAT inclusive amount. Your business creditor should be recorded at a VAT inclusive amount. Then the item that you are buying or paying for should be recorded at a VAT exclusive amount. The income that the business make, which is the fees account, should be recorded at a VAT exclusive amount. Then you then have the VAT separate. The VAT input when you are paying or buying for something, which is debited. The VAT output when you are charging your customer or selling something, which will always be credited. That you are fine. Okay, so I've got 32,000, which is for the business debt account. Yes. Okay, let me just quickly confirm that. Oh, 1,174. Okay, thank you for that. 1,174. Thank you for the correction. I thought I wrote the correct amount there. Okay, yes. Sorry? Zoom. Better? Okay. So 32,890. We need the fees, which is excluding VAT, which is part of our owner's equity account. So this means that our owner's equity account will increase by crediting fees. So over here, we'll say 32,890 multiplied, or sorry, divide 1.15. This then gives us 28,600. So this means that here we have got a plus 28,600, which is the actual income we make. So remember, your LPA Act will tell you how much you're supposed to charge a client for a service. But at the same time, it also tell you that for this particular job, you can only be able to charge the client for a minimum of 3 hours to a maximum of 20 hours. Anything in excess of 20 hours, you will have to put it in writing why you are charging the client above the maximum threshold in terms of billable hours, so that the Legal Practice Act is aware of your practice that you went beyond the billable hours for your client. And then once you calculate, this will then bring you to the fees that you're charging the client, which is 28,600. Then you're going to add the VAT on top of this. Once you add the VAT, this means that you're going to charge the clients the total invoice of how much? 32,890. The VAT that you charge on top is the one that you're going to go and pay over to SAS, which is our liability now. So this means that the VAT is going to be 32,890 minus 28,600. This will then give you 4,290. Or you can just say 32,890 multiplied by 15 divided by 115. Questions? No questions. Okay. Transaction on the 10th. Transaction on the 10th says purchased stationery on credit from ABC Stationer, 11,000 excluding VAT. You guys recorded this without VAT on your ICE task. So this is excluding VAT with, this is where unless stated otherwise come in to inform you that this amount now, it is not what? Including VAT. You need now to identify. We are buying stationery. Stationery is a what? Standard rated supply. So this means that it should be including VAT. So therefore, you are going to then calculate the VAT and calculate the amount that is going to be payable to the supplier since you're buying this on what? On credit. So the accounts affected, business creditor, in brackets, ABC stationers. Second account affected, stationery. Those are the two main accounts that are affected. The third account that is going to be affected is going to be your VAT input. The VAT that this person is going to charge you, the one you are going to calculate. So to record this, for stationery itself, it will be recorded at a VAT exclusive amount, which is already provided, which is how much? 11,000. So these have got a negative effect on your owner's equity. So we're going to say minus 11,000 the amount that you're going to owe now ABC Furnishers is going to be the VAT inclusive amount. So this means that on your calculators, you're going to say 11,000 multiplied by 1.15. This gives you the VAT inclusive amount, which is 12,650. So over here, you're going to say plus 12,650. Then we can calculate or then include the VAT. Since we are buying, this means that the VAT charge is VAT what? Input, which is always debited. And then VAT input is an asset, so this means that it's increasing the amount receivable from SARS. So in this case, it's going to be 1 plus 1,650. Following. Okay. Then on the same day, it went and said that a new client, Romeo Ronald, makes a direct deposit of 40,000 for future legal services. So now we are receiving 40,000. This is for future legal services. So this is going to be what? Trust money. So this means that it's going to be your trust transaction. It will go to your trust books or trust cash book. So this means that you will indicate the side that this is now, we also have a what? A new transaction, which is a trust transaction. On this transaction, some of you mixed up the accounts. So your trust bank, it's an asset account. Every time you receive future legal services money, it's always debited to indicate an increase in the money being received. Then you create a trust client account or a trust creditor account to indicate who the money belongs to, which is a liability account, to say that the money sitting in our trust bank or the money that we just received, we owe it to this trust creditor, Romeo Ronaldo. And therefore, this is the person that we owe the money to. Until you render the service, you do not have claim over this money. Even your practice does not have claim over this money. So you always become liable until you render a service. So for this, the client is giving us 40,000. So it will be a plus on the assets, 40,000, and then a plus on the liabilities of 40,000. And remember, when you receive money, when you pay your supplier, there is no VAT included. Because where is VAT included? When there is what? Consumption of goods or service. Here, there is no consumption of goods or service. You are not selling anything, you are not buying anything. So there won't be any what? VAT effects or treatment. But the moment you are paying for something or buying something, there is an exchange of what? Goods and services. So that is where VAT is then calculated. But before you calculate, is the item that you're buying or receiving a standard rated item, zero rated item, or exempt? So that's where you put in the application for VAT to say that this is standard rated, therefore it's including 15% VAT. This is zero rated, it's including 0% VAT. This is exempt, there is no VAT at all. And then you have got non-claimables. You are charged VAT, but you cannot be able to claim the VAT back. So there's no need for you to what? Show the VAT amount. But when you record the amount including what? VAT. They might tell you that you paid for staff refreshment. Amount is excluding VAT. Calculate the VAT, add the VAT, but then when you record, do not show the VAT because it is not what? Claimable. The item is standard rated, you will be charged VAT, but you're not going to be able to claim back the VAT. Are we together on that part? Okay, moving forward. Transaction on the 13th. This is the transaction. Paid entertainment cost of 2,500 with a business debit card. This was for celebration dinner after successful defense of a client. So this is for both personal enjoyment. This is what we call business and pleasure. So because it's also for personal enjoyment, your SARS will not allow you to claim back the VAT that you are charged on this. If this transaction was saying VAT excluded, we were going to calculate the VAT, add it to the amount, and record the amount including what? VAT. But do not show the VAT input. Are we together on that part? Okay, so accounts affected. It's going to be entertainment account. The second account is going to be a business bank that you paid using. So since this is an expense account, we're going to debit the expense account, credit your what? Business bank, which is already done this side. The amount that is leaving your business bank, which is an assets, it's 2,500. This also reduced the owner's claim by 2,500, which is part of your owner's secrets. Sorted. No vets. Moving forward. On the 17th, Julie Job attorney informs Lauren attorney that she is insolvent and makes a direct deposit amounting to 45%. The remaining debt must be written off. Is it written the same on your workbook? So I think I made this one easier for you guys when I uploaded it on the as an ICE task. So I believe it's saying that she's insolvent and makes a direct deposit for 45 cents in the rand, right? 45 cents in the rand, yes? No, this was included, but this part of 45%, it was, no, I'm saying it was included as 45% in the ICE task, but in the workbook, it's saying that she makes 45 cents in the rand, which is 45% of the total amount that she owes you. So that's what it means. So over here, if you look, we've got an account for Julie Ju as an opening balance. She was owing us 38,000. With this 38,000, this is the amount outstanding that she owes us. So she is now saying that I am insolvent. I won't be able to pay all the money, but I'll be able to pay what? 45 cents in each and every rand that I owe you, which if you convert that into percentage, that's 45%. So this means that we are going to calculate 45% of the amount owed, which is the amount that we're going to be receiving. So when you record this transaction, always start by recording the amount being received. After recording the amount that is being received, you then record the amount that is no longer going to be received. The transaction of the amount going to be received will be recorded in the which journal? Cash book, receipts, or cash receipts journal. The amount that is not going to be received will be recorded in your general journal. So let's go and record this in our accounting equation. So business bank will be debited, business debtor will be credited. So this means that here we'll then show, I'm going to show using the bank column side. So I've got 38,000 multiplied by 45%. So that's 17,100. So this means that in our assets, our bank account is increasing by 17,100. At the same time, the customer's account is being reduced by how much? 17,100. So this means that on the equity side, zero, on the liability side, zero effects. So this means that this transaction increased what? Both your assets as well as also what? Decrease your assets account. Then we then move forward to the credit loss, the amount that we are no longer going to recover, which is your bad debts. So on this part, We're receiving 45,000. We recorded the 45,000. Now you also need to record the difference, which is no longer recoverable. So the difference is 20,900. So with that 20,900, so I'm just going to calculate it for you. 38,000 minus 17,100. This means that 20,900 is not receivable. So this means that the customer account will have to be reduced by 20,900, which is no longer receivable. So the accounts affected, I'm going to start there, though I already recorded them. Credit losses, business debtor, and then VAT output. Sorry, VAT input, not output. So when we charge this customer earlier on, we charge this customer VAT what? Output. So the customer did only manage to pay us 17,100. Then 20,900 is no longer receivable. But on that 20,900 that is no longer receivable, it is also including what? VAT, which the VAT is VAT what? Output, that we still have to pay it over to SARS. But now we're saying that 20,900, since it's no longer receivable, we also need to cancel the VAT included in the 20,900. So we're going to then create a what? VAT input account and debit the VAT input account with the amount that we're no longer going to pay who? SARS, to offset the one that was supposed to be paid over to SARS. If we already paid the amount to SARS, we will be claiming the money back from SARS. Are we together? Okay. So this means that our losses will be at a what? VAT exclusive amount. So this means that over here, to calculate the losses, we'll say 20,900 divide by 1.15. This will then give you 8,174, which is the loss that we just lost as an income, which is the VAT exclusive amount. So over here, you'll indicate we lost minus 18,174. Then you are going to indicate the VAT input to cancel the VAT output. VAT input is always a positive. So you go and say 20,900 multiply by 15 divided by 115, or just calculate the difference between the two. So this means that now you have got a VAT of 2,726 that you're going to claim back from SARS. If you haven't paid the money to SARS, you are cancelling the amount that you indicated that you were going to do what? To pay over to SARS. In your memorandum, I think they went and debited VAT output. So that is an incorrect procedure. So you always either debit input or credit output. You do not go and debit your VAT output. You only do that when you are transferring the account to a control account, which is what we're going to do later on. So any questions with regard to this transaction? Any questions? Anyone? No one. Okay. Moving forward, on the same day, on the 17th, it says that we purchased a new computer for the secretary on credit from office equipment, 10,925. So this is the computer that is going to be used in the business for business purposes. So this computer means that the VAT that we're being charged will be able to do what? Claim it back from SARS. So this means that to now identify the accounts affected, you're going to have your equipments affected, business creditor affected, business creditor who? Office equipment. Because you are buying, Then you also have your what? VAT input affected. So to record this, we're going to indicate this a business transaction. Equipment will be debited. Business creditor will be credited to indicate that we now owe this supplier this much. And then there will also be what? VAT input. So the total that we owe this supplier after purchasing on credit is the amount including what? VAT, which in this case is 10,925. Then the equipment that we bought, we say record it at what? VAT exclusive. So this means that here we're going to have 10,925 multiplied by, sorry, divide by 1.15. This then gives you 9,500. So over here, your assets will increase by 9,500. Then the VAT that is receivable will be the difference between the amount that you owe the supplier and the value of the good, which is the VAT exclusive amount. So I can just take this and say multiply by 15. So that's 1,425. So that is the VAT that we're going to claim back. So every time, please don't forget, your accounting equation always needs to balance. If it doesn't balance, one of the accounts recorded is incorrect, or your VAT calculation is somehow incorrect. Any questions? No questions. Okay. Now moving to the 24th. Accounted to Romeo Ronald for legal services completed 40,000 excluding VAT. Again, some of you, this transaction, you recorded it as a trust transaction. Account, we are sending an invoice to the client saying that this is the amount that you owe us for the work completed. So this means that the customer becomes a what? A debtor to the business. And then we are charging this customer fees worth 40,000. This is excluding VAT. So this means that this is our total what? Fees, which is the income that the business made. But now we need the total invoice amount, which is the one including what? VAT, that we're going to bill the customer. So when we record, we're going to debit business debtor, Romeo Ronald, to indicate that this customer owes us this specific amount. The amount that the customer will owe us will be including what? VAT. And the VAT will be VAT output, which is credited. So the income that the business made, 40,000, which is the VAT exclusive amount. From this VAT exclusive amount, we'll go and say 40,000 multiplied by 1.15. This then gives us 46,000. So under here, we're going to show 46,000 plus 46,000. Most of you recorded the 40 and the 6,000 separate. You are supposed to combine them and record it as one amount. Do not show them separately. And then the VAT amount that we owe SARS plus 6,000. Our liabilities are increasing by 6,000, which is the amount payable to SARS after charging this customer 40,000. Following. Questions? None. Okay. On the same day, Toby Taylor settled his debt with a direct deposit. So when we look at this, we need to look at this in multiple ways. First thing first, how much did we bill Toby Tyler? So Toby Tyler, I'm going to use this site. First, we billed Toby Tyler this month 32,000, how much? 890. Then we're going to move back to our opening balance. Because now you have got previous month balance, always go backwards and say, from my opening balance, do I have Toby Tyler on my opening balances? So we do not have Toby Tyler, right? So the only amount Toby Tyler owes us is for the current month, which is 32,890. Then after that, we move forward and go and say, do we have him as a trust client? Yes, we do have Toby Tyler as a trust client. We currently hold how much? 28,000 on his behalf. Now that we have rendered a service to him, this means that we are entitled to part of this money. Then how much does he owe us? 32,890. His trust account only have how much? 28,000. This means that we will have full claim of the 28,000. But 32,890, that's what he owes us. In his trust account, he has 28,000. So we're going to take the 28,000 and subtract it from the amount that he owes us. So this means that once we have full claim of the 28,000, you will be owing us how much? 4,890. So this means that the amount that is currently settling, it's what? 4,890, because at the end of the month, we're going to transfer the 28,000 now to our what? To our business bank. He no longer has claim over this money. That's why he's only settling the amount that he what? He owes us. We no longer owe him this 28,000, but he now owe us. But when he owe us, he's owing us in a what? He's owing us a business debt. So the money will be received in what? Business bank account, not what? Trust account, because he's settling a business debt. So this means that your business account will then be affected. This means that you are going to debit your business bank account, credit the business debt account to indicate what? His account is now being reduced by the amount that we are receiving. So business bank, it will indicate a plus 4,890. That's the amount we are receiving. At the same time, the business debt account is an assets. So since he has paid us, it's going to be reduced by how much? Minus 4,000. Okay, just a second. Minus 4,890. Okay. I'll just use space just for this. So, as I indicated earlier on, when you are receiving money, there is no VAT. When you are paying your supplier back, there is no VAT, because you're not getting anything in exchange. You're just doing what? You are just paying the supplier the money that you owe them. But the moment you pay for a service or you pay for a specific goods, which it can either be an asset or an expense, then there will be VAT included. So over here, this customer is paying us the money that he owes us. We're not giving him a service, he's just paying us. So this means that there won't be what? Any VAT. So that you do not go and record VAT on money that you are receiving. You record VAT when you charge the customer, not when you receive the money. Okay, on the 29, bank charges us amount to 506. The bank is offering us a service, which part of that service is to do what? Hold money on our behalf and facilitate what? Transaction on our behalf. Every time we render a transaction, the bank is the one facilitating those transactions, which means that they are offering a service to us. So which means that when they charge us bank charges, we are being charged for what? For a service. So this means that they will then going to be what? VAT included in the amount. But when you receive interest, there is no service. You are just earning what? Returns over your investments. So this means that there won't be any VAT because there is no exchange of any goods or services. So hence it is exempted, your interest. Same thing when you're being charged interest by the supplier or by the bank. There is no service. There is no exchange of goods or service. You are being charged for negligence, for not settling your amount earlier. So therefore, there won't be any VAT. So it is exempt. But for this one, which is bank charges, it's for the service. So therefore, VAT will be included. So the accounts affected, bank charges, and your business bank. And the third account, VAT input. So this means that this side, we're also going to have VAT input on the debit side. The total amount we paid, 506, which is a decrease in our assets. Then we said 506 divide by 1.15. This then gives you 440. This means that this is the actual what? Cost for the bank charges. Then the VAT will be 66 Rand. And then this transaction balance. And then on the same day, we paid salaries and wages, 127,000 by EFT. This, I've just already recorded it because I know that by this stage, you're already familiar with the transaction and it won't be a challenge, yes. No, we are charged VAT by the bank. So the bank, they charged us 440 for their service. Then for that 440, they need to include VAT. So when they include VAT, the total bank charges come to 506. So this means that within this 506, there is a VAT charged. So that VAT, we're going to claim it back from SARS. So every month, the business will receive a bank statement. The bank statement at the top of the bank statement or either at the bottom, it will say bank charges, VAT charged for all transaction services. If the bank charge you transaction fees, EFT fees, there is VAT included because they are charging you for what? For a service. That VAT, they will then combine it and say that this is the total VAT they've charged you. So it will be included in your bank statement. So this means that when you look at the total bank charges, if the transaction just says bank charges, it means that these are already including VAT. Because in our case, we are told that all amount are including VAT unless stated otherwise. So if this was not excluding VAT, it was going to say that bank charges excluding VAT. Then you are going to charge what? To add VAT on top of the amount. So that's why you have got the VAT input. So the bank offered a service. When they offer a service, they are registered as a VAT vendor, so they will charge you VAT. Salaries and wages, we're paying the employee, so there will be a tax because there is a service. But that tax, it is not what? VAT. It is income tax. So over here, we'll show the amount that we're paying our employees. And this amount is already excluding income tax. So we'll show the amount that is completely paid over to the employees. On the other side, in our books, we'll show the total cost of the gross salaries that we are supposed to pay the employee, the deduction, and then the net pay. What we just paid the employee. This is the net pay of the employees. Okay. Transfer the necessary money from trust bank account to the business bank account. Okay, this is where we now draw that line. Uh, just to quickly draw the line so that we can have a record. So I'm gonna close this off once we are done again. Trust, business. So let's go back this side. We had business client Salis No. He owed us 45,000. Okay, I don't know what happened. So it recorded everything on the other side. Trust, business, Salis No, 45,000. Opening balance, Julie Ju. These clients owe us 38,000. And then we go to our records. Who did we bill again? You go down. Which other client did we bill? Isn't there a client that we billed throughout the month? We accounted to Toby Taylor, Toby Tyler, 32, how much? 890. We also have RR, Romeo Ronald. We built this one 46,000. So there is one of the account that was written off. Which account is that? Is it Julie Jup? So we crash this out to indicate that this one was written off. Then we go to our trust side. Uh, we have got Salis No with 55,000. And then Toby Tyler, 28,000. We also receive money from Romeo Ronald. How much? 40,000, right? Did we receive any other money from another client beside Romeo Ronald? Ronaldo, sorry. Did we receive any other money from our trust account? This was it, right? So now we need to transfer money from trust bank to business bank that is due to us. So in this case, we'll come Salis No owe us 45,000. In his trust bank, he has got what? 55,000. So this means that we'll be able to claim the what? Full 45,000. So this means that for Salis No, we're claiming the full what? 45,000. I'll just say claimable from trust. Then we move to Toby Tyler. Toby Tyler currently owes us 32,890, but he also settled the what? The balance of the 4,890 because he knew that we're going to be able to claim how much? The full 28,000. So based on the amount that he owes us, we're going to claim the full what? 28,000. So this means that here we add the 28,000. Then we go to Romeo Ronaldo. We charged him 46,000. His trust account has 40,000. So we'll be able to claim the full what? 40,000. So over here, we'll then put the 40,000. So this means that the total money to be transferred from trust to business is going to be 45,000 plus 28,000 plus 40,000, which is going to be 100 13,000. This is a combination of all these amounts. About the balance remaining, we'll do that when we do the ledger accounts. If someone still owes us, we'll see that through when we prepare the what? The ledger accounts. So this means that the money to be transferred from trust bank to business bank, it's 113,000. So this means that this side, you'll indicate that this is a business and trust transaction. The account to be debited is business bank. Account to be credited, trust bank. So there will be a plus 113 in the business bank, and there will be a minus 113,000 in the trust account. So this is how you record this transaction in the accounting equation. The one for VAT, I will leave it until um, we completed the journals. So this is everything in relation to recording your transaction on the accounting equations. So I will be stopping this recording